Hello everybody and welcome back to Property Couple. I'm Lia.
And I'm AK.
And this is our channel where we talk about property investing, business and working together as a couple.
And in today's video, we're going to be looking around a property and assessing which strategy may work better and whether or not we put in an offer for this particular property. This is going to be a mid-terrace property in Warwickshire, and we're going to run through the numbers live as we are talking through them now, have a look through the property and the floor plan and just discuss the difference between if we were looking at it through the lens of purchasing this as a buy-to-let property, a standard buy-to-let property, versus what could be an HMO property.
Awesome. And for those of you that aren't familiar, HMO stands for houses of multiple occupancy, where you rent out each room individually on separate ASTs to tenants that might not know each other.
One of the guys there was talking about things being very expensive at the moment, materials and that sort of thing. And he was looking at maybe doing a potential buy-to-let strategy, traditional, 3-bed house, rent it out to a family. And he was talking about the numbers being pretty tight, and that kind of made me think about doing this video to show the difference between a buy-to-let strategy and an HMO strategy in terms of the costings, and I can run you through those numbers.
I didn't actually go on this viewing, but I've got the video walk around here, so I thought we could just play that.
In through the front door, and we're in the first sort of living room there. The agent there actually was talking to me about this particular property actually being underpinned, so I think it was probably worth examining that in a little bit more detail. The focus.
Holy
Sorry,
moly.
I lose the focus and then we have to go to the next clip.
We are moving back through from the first reception room into the second. There's a little cubby hole here for storage. Usually you find electricity meters in there as well.
Yeah. First thing to mention is that there is damp in this property, but it's a probate sale, so this property has no doubt been empty for a while. We are in the winter months, so it's kind of a usual thing there. Nothing majorly to worry about. However, what I would say, and I always look to potentially strip as much plaster back as possible and produce a better quality finish as well, which just helps you in the long run as well, because this is going to be a long-term investment, hopefully. So that, I think, just used to be like a store cupboard. I don't quite know what they're using it for. Potentially downstairs toilet, maybe it was back in the day. The kitchen is fairly small, but like all of these types of properties, there is a shared alleyway as well. So just moving outside into the garden, it's very low maintenance.
Yeah.
Which is ideal.
There's the downstairs loo in the garden. Very common for these sorts of properties
Very
to find
common.
them outdoors. That was the thing back in the day. Now we've moved toilets inside. Progress. And the garden looks very low maintenance, which is great, because the last thing you want when you're renting it out is get an overgrown garden.
Yeah, so you'll notice there the side access on the left-hand side. So always something that we look for, just to give us that option, whether or not we can convert this into an HMO. Usually we turn that front room into a bedroom, so that's why I'm looking for that, in order for us to potentially create a new front entrance to the house via the kitchen, essentially.
We're now going up the stairs.
And really what I'm looking for here, as I go upstairs, is just how big the entire square footage of the space is. So I'm not as concerned with the layout, because we can change that, and you've seen in some of our other projects that we've actually changed the layout to do two different styles in the same type of property. So you'll notice here that there's a long corridor, and at the end of the corridor is the main bathroom, and that's actually been split into the toilet and a shower room, so it's actually separate. You see the little cat getting a shower. It's a cool cat. So here what I'm trying to understand is just how much space there really is to just play with. That end bathroom there, apart from that window being pretty cool.
Stained glass?
Yeah. I think they've obviously done some works to the property there, because that room is kind of empty, and I think it used to be a bathroom, and they've kind of changed it around. The good thing about the front room is that it's a very, very good size, and I know for a fact we could get an ensuite in there as well. But this property just felt a little bit tight. The reason I was looking these cupboards as well is to see whether or not we can utilise that space, as we have in previous projects, to become part of the bathrooms, part of the en-suites within those bedrooms.
So this is definitely the biggest bedroom in the house. This one here at the front, at the top.
And it usually is. And actually, usually that middle bedroom is a little bit bigger. This particular property just seems a little bit tighter for whatever reason, but there's always creative solutions.
I was just going to say how narrow the stairs and the corridor, the landing felt as well in this property. Quite a lot narrower than what we usually have in our HMOs.
Yeah. It's worth analysing the numbers both for a buy-to-let and an HMO. My gut feel, my gut instinct is that this is slightly too small to become a 4-bed, 4-bath HMO without much more extensive work, without doing things like extensions and having to have planning permission and that type of thing, which I think just throws the numbers way off.
We could have a look at doing a 3-bed HMO, utilising the 2 already existing bedrooms upstairs and the first reception room of the downstairs. So 3-bed HMO, and then compare it to a 2-bed family home.
People do ask me this question a lot. They say, what about a 3-bed HMO? And what I would say with that is you just kind of leave yourself a little bit more open to risk. You've only got 3 rooms instead of 4. So if one of those rooms is paying for the mortgage and another room is paying for the bills, then you're kind of relying on that other room to pay you a profit. And what happens if you have a void period? These types of things. So it just leaves a little bit more in the way of risk. And when I was walking around the property and there was different buyers or potential buyers, looking at the numbers, discussing, this will make sense now because we can see what they were thinking and we can see if another strategy might actually be better for this particular property. So we are going to be looking at this property as a buy-to-let.
So it was on for 130, so assuming that we offered the full asking price of 130.
Which we probably wouldn't, but let's go with that. And looking at the rental value.
So if it was done up and you fixed the kitchen, bathroom and damp proofed it, I think you could achieve around 900 per month. That's the going rate in the area for a 3-bed family home.
So let's talk about the works for this. Now I've actually put in £40,000 to complete the works, which even that I think is going to be tight, but that's just my opinion.
Yeah, a lot of people tend to kick off in the comments when you put down sort of large amount like 40,000, but it probably would for new kitchen, new bathroom, plastering, damp proofing, new flooring throughout. I think you are looking at labour costs, materials have gone up as well. 40,000 is a good amount, and that's got a little bit of contingency on it as well.
Perfect. And I think, also to mention there that some people might be handy with the tools. We're not.
No, some people might be able to do that for like 20 grand and just do it all themselves.
Exactly.
And take about a year doing it.
Cool. Now let's look at the right hand side of this deal calculator. So this is where it gets really exciting because we're going to be looking at refinancing this project once it's complete, once we've added some value to it and we refinance it in order to pull some funds back out on the other end. So let's look at the refinance value. Now from our own experience, having done projects in this area as well, we feel like the value of that house could be around about £200,000 when renovated.
So obviously when you work with a broker, they'll have access to all of the market. But yesterday I did a quick Google, and based on today's interest rates, you could get a 5.5 interest only buy-to-let mortgage fixed for 5 years. So if we base it for the purpose of this video on 5.5%, then we can work out the numbers from there. So we're borrowing 75% of 200,000, so it's 150 grand, and working out what 5.5% a month on that would be interest only is coming out at £687.50 per month. So that's quite a chunky mortgage once you've done the remortgage of the higher value of the property.
Let's talk about management as well.
So if you do choose to have a managing agent, they could be charging around 10% per month of the rent. So in this case, £90. So you've got to deduct that from the rent. And then Mo here, we've put, that's down to things like incidentals, emergencies, fixing things that go wrong, putting aside 10% of that a month, in case something happens.
So that just stands for monthly operating expenses.
Yeah. That was what I was looking for, but I couldn't find it.
But as Leah mentioned, it's just a contingency to put aside 10%, so we always like to look at these deals with these contingencies in place. Obviously, if you remove those, then the cash flow will increase like this. So if I remove that £90, obviously the cash flow then goes up, your return on investment goes up. But let's be realistic, let's cover ourselves. At the moment, this particular deal, if we were to purchase it at £130,000, if we were to get a refinance value of £200,000, and if all the other parameters that we've put down there kind of go there or thereabouts, you'd be looking at a positive What?
No,
Oh yeah, sorry. You'd be looking at a positive cash flow of £32.50. Sorry, you're wincing there.
I
Because
know, 32 quid a month for all that work.
Yeah, and I think kind of walking around with those other potential buyers as well, I kind of understand, what they're looking at now as well, because we've actually run the numbers.
It'd be 2% ROI. It would take 51 years to wash its face. So that's how long it would take for you to make your money back on it.
Yeah.
And yearly cash flow would be 390 quid, not including tax.
So it's a bit of a tricky one. Probably not something that Lia and I would do, or it definitely wouldn't be a project that we would source on and work with others to do as well. I think what's going to be really cool now is to look at the numbers on a 3-bed HMO and just what happens in terms of that. The parameters that wouldn't change in this scenario would be the purchase price.
Yeah.
So that would stay the same. In terms of all of the works and renovation, that would definitely change.
Go up.
So again, just from our experience, I think this would be a lot closer to £70,000. Now, obviously, we can say that with experience, having done multiple projects very recently as well.
So the reason why the refurb would be higher for HMO is because we'd be going back to brick, doing all of what we said we would before with the damp proofing, replastering, but we'd be doing reconfiguring, so bedrooms in different places. We'd be adding en suites into every room, so that's 4 bathrooms, a new kitchen obviously, and finally we'd actually furnish the place fully so that it'd be ready to move in for tenants.
So on the right hand side, the business end of this calculator, let's look at the refinance value. Interestingly, I don't think it'd be much different to £200,000. It might be slightly more.
We might achieve 220 based on something we had revalued up a couple of years ago, but you could play it very conservatively and leave it at 200, but it would maybe refinance up for more.
Let's see what happens to the numbers when we keep it at 200,000.
Yeah.
Now, the mortgage is going to stay there or thereabouts. It's going to stay the same. Where it starts to change is the management and the MO, the monthly operating expenses. So the management, now I'm going to keep that at 10% because that's how much management we pay on our 4-bed HMOs. But it can change because you're dealing with, more tenants, more things going on, so agencies can often charge a little bit more for an HMO, but let's keep it at that because that's what we have. In terms of monthly operating expenses, I used to have it in at 20%. It's much closer now to 30%. In terms of bills, council tax, all that sort of stuff is very expensive now.
So in this area where we currently invest in the West Midlands, the average price for a room is £550 per room, so we can go with the average, 550, and times that by 3.
So 1,650. That changes there all of a sudden. So you'll notice the first thing that happens there is the cash flow jumps up, and so does the return on investment. That's kind of where we land with a 3-bedroom HMO. It's cash flowing positively, which is a good thing. However, I don't like the idea of a 3-bedroom HMO.
It's a bit too risky, isn't it?
It's too tight. Because if you have one void, so that would be 550 plus 550, which is 1,100. Bang. All of a sudden you are in negative cash flow, which basically means that you would be paying £27.50 a month to house other people. That's what I don't like about 3 beds. Now, if you had a 4-bed, all of a sudden that completely changes and it kind of makes a lot more financial sense. So we're talking about, should we invest in this property? Should we put an offer for this property if we were to buy it at the purchase price? Well, we've looked at buy-to-let. It doesn't quite work. We've looked at an HMO. For a 3-bed, it doesn't quite work.
Let's look at quickly a 4-bed because I think the property is a bit tight. Yep. Space-wise, but
so 550
times 4, it's 2,200. So it's exactly what one of ours rents for.
All of a sudden, the ROI jumps up to 15%, which is very good. Cash flow at £632.50. So all of a sudden, you can see there that it works. I would entertain that deal, and I would also be happy to source that deal on. If you had one void as well, you're still in positive cash flow. So I think this is just a really cool way to just highlight how we look and how we analyse at deals as we walk around them.
Yeah, and I just want to emphasise what you said earlier about the fact that with a 3-bed, if one room's covering the mortgage or 1.5 rooms covering the mortgage and 1 room covering the bills, 1 room needs to cover incidentals, new boilers, new things going wrong, and then 1 room is going to leave you a bit of profit. When you take away the 4th bedroom and you do just operate as a 3-bed, you're just leaving yourself so exposed to things going into the minus and going into the red that it's just not worth looking at. All I was going to say is that obviously the situation does change if you're not using mortgages, if you're buying cash. Everyone's situation is different. Not everybody's using bridging loans on the front end and then buy-to-let mortgages on the back end. Like, there's so much to consider, and I think that's why you need to really deep dive into every deal and look at your situation and maybe work with a mentor, talk through a deal like with someone like AK or me. That's just my thoughts on it.
Absolutely. I hope you guys were able to learn something today. If you haven't already, remember to check out our website, propertycouple.co.uk. There's going to be loads of free stuff coming your way soon, so check that out. If you haven't already as well, please subscribe and hit that like button, and we will see you in the next video.
Take care, everyone. Bye.